Morning, Steve Freed in Chicago with the morning grain comments. Well, overnight prices are a little bit higher. Yesterday we saw spreaders buying beans and selling corn and wheat. I think mostly that was because of the drop in U.S. soybean crop ratings last week. And so I think the market is really going to focus a lot on Friday's USDA report. First in the soybeans, we'll see what kind of yield USDA puts in, what kind of demand they do, the World Soybean Matrix. And then we'll see what they have as final carryout and how the market wants to react to that. A lot of people don't think we'll take out the highs recently in the November beans around 922, given the uncertainty of the trade issues between U.S. and China. Overnight, the U.S. announced that they were going to, on August 23rd, impose tariffs on $16 billion worth of additional Chinese goods. As far as the Chinese are concerned, overnight, their soybean and soybean meal prices were sharply higher on concern that reducing soybean imports from U.S. is going to reduce their supplies. We also noted that there is no indication by the Chinese government that they will allow U.S. soybeans in. Continue to see higher Brazil prices. Right now, Brazil prices are a little over, Brazil prices are about 21% over U.S., which is still cheaper than the 25% U.S. soybean tariff. So right now, Brazil is trying to ship as many beans as they can in October and November before they run low. And their record crop last year certainly helped them be competitive a little bit longer than what normal is. Over in the corn, it's all up to the U.S. corn yield. I think a lot of people feel that if the USDA on Friday comes out with a yield lower than expected, we could see a pretty sharp rally in corn as the funds cover what shorts they have left. On the other news, they could lower global corn supply enough to raise U.S. corn exports, so a combination of a little bit lower supply and a little bit higher demand could send corn futures higher. As far as wheat is concerned, wheat's undervalued. Right now, when you look at some of the prices and where the Matif is trading, it's a little over $7, maybe around $7.10 per bushel. And Russia is still the cheapest wheat in the world, but U.S. soft wheat is the second cheapest. And Russia is still trying to talk about maybe an export ban. And I think one of the reasons why they may be doing that is to scare their farmers into selling wheat before the ban is imposed. They are still trying to sell wheat, but some of the questions that buyers have is, when that wheat is finally shipped, will it have an export tax on it? Will it even be exported? So a lot of questions in the wheat market. It is interesting that some people smarter than me have looked back and looked at years in which world supply of wheat has dropped as much as it could this year, and the highs in wheat weren't made until February, not August. Right now, maybe people think that USDA's numbers are probably 18 million metric tons too high versus what may be going on in the U.S. Weather-wise, Midwest should be warm and dry over the next 2 weeks. Europe should continue to be mostly dry, especially across the northern areas. Australia is dry, and so the concerns for wheat and corn in Europe, and maybe some concerns for Canada wheat, and then we'll see how the U.S. finishes, could offer some support underneath the market, especially in corn and wheat. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.